What's up, guys? It is Chris Mitchell here, bringing you this lovely cryptocurrency video. I want to show you how I'm shorting the market right now, why I'm doing it, and let's go ahead and do this on ETC. That's what I'm looking at. Ethereum Classic, which rallied to the dang moon, and now it is about to come down a little bit more. So I'm going to just throw this in right here. Boom. 25%. I don't think it'll let me short that much. Let's go with 20,000. Boom. And give it a little password love right there. All right, so what do we have on the board here? Why are we getting short? Where are we going to put our risk management? That is the key. Where's our take profit? Where's your risk management and your take profit? Because if you don't have an entry point, you don't have an exit point, and you don't have risk management, then you are purely gambling. And this is the 1 hour time frame. We're just getting in the first part of this hour and bleeding into a profit already. Come on. Let's go. My order did not fill. How many positions filled? 3,900 out of 20,000. So not giving me a whole lot of love right there, but I want to show you why we're doing what we're doing. Is there 2 orders in there? So how much leverage do we got on this trade? 5x. That's... They limit me to 5x. They don't want to take all their money, me to take all their money at KuCoin. So 25,000. Do we want to add to the position? You got 5 minutes left on this candle, 5 minutes here. And we're just breaking the range here to the downside. So will we get a little backfill is the question. And with this red candle with volume, I would suspect that if we do get a backfill, it's going to be small, if anything. Small, if anything. We got the silver cross come to the downside for the second time. Usually the first one is negated and the second one. And so we're bleeding it out. And where's going to be my take profit? That is the question. So getting on here to the 15-minute time frame. Do I want to add? Do I want to add is the question. Is Bitcoin breaking down alongside of Ethereum Classic? So volatility is expanding. We've got momentum to the downside. We've got the jewel firing down. And where is my target? Well, my target is right here. And it looks like we're going to get hit. So do I want to add a bit? Because this profit of $320 is not satisfying my needs here. And why are we taking this trade? Well, let's see if we can add a little bit. Add a little bit on the 5-minute time frame. We're breaking down with volume, so let's add a little bit to this lovely little trade setup. And why are we taking this trade? So let's reiterate here on the... Oh, we already hit that target. So is that... Are we ready to let her go? So momentum is crossing to the downside with the jewel sell signal. Volatility is expanding, getting quite erect. And what do we have? We've got multiple drives of hidden bearish divergence. What is that? Price is making lower highs alongside RSI making higher highs. So we are getting a bit of a bounce off this target here. And again, lower highs coming down. We want to see 1, 2, 3, 4 drives. 1, 2, We got 1, 2, 3, 4 drives. So where does that give us a target? To the 1618, which is pretty much where we're at right now if we use candle bodies. And Bitcoin is breaking down, so that would be my note, to just take those profits and run. I'm going to go ahead and do that. So I'm going to limit out at 3204. And I'm going to hit 100% and confirm that for a profit. And I would have put my risk management right above there. Now, maybe it doesn't profit out, limit out. On the 15-minute time frame, we've got quite a bit of time left on the 1 hour time frame. Do we see the same divergence on the 1 hour is the question. Maybe I should not limit out. Right now, as the 5 and the 15-minute are about to close. Could we be getting some bullish divergence on the other side? So let's take a look. 1, 2, 3. If we confirm this as a local low, which I don't believe we will, crossing down here, the momentum to the downside like that, alongside Bitcoin giving it up as well at 19,685. Again, we've been looking for that 5-minute time, or excuse me, that 19,300 target to get hit, and we haven't seen much. We haven't seen it happen as of yet. So do I want to just limit out real quick and take those profits is the question. No, with this red bar right here, this volume spike in redness, I would assume that we may get a little bit more of a violent move to the downside, but hey, close enough is close enough. I was at a $500 profit. Now I'm at 186. So let's get back into the charts here and see what we see on Mr. Good Old Bitcoin. Yeah, picking up the momentum to the downside. I expect these wicks to get filled and some bullish divergence to begin to formulate over the weekend. You know, typically you're going to get more of that sideways price action. Again, I would expect a little bit of follow through and my target to get hit on the 5-minute time frame. So this is just a short-term trade, and we are getting close to our target right there. Let's see if she wants to hit. I'm going to get a drink of water and be right back. And we just ripped through my target. Here we go. So racking up a little bit of a $400,000 or a $400 profit. Not bad for 5 minutes. Now, do we want to jump into the meat and potatoes of what I wanted to talk about today, or do I want to trade some more? That is the question. Let's talk about, let's just get this video done here while I've got my smile on my face. And here's what I want to talk about. And by the way, welcome back to Bitcoin Advisors channel. So maybe I want to get one more trade in. Why the 15-minute on Bitcoin is down, the 30-minute is down, volatility is just beginning to expand. And are we going to have any bullish divergence forming? Not quite. But volatility is beginning to expand. We are just above the 20 percentile, so I would expect some continuation off of this sell and the wick to get filled. So, all right, let's go to Bitcoin here. Get this beautiful chart up here. And so if we wanted to take a quick little trade to the downside, expecting the wick to get filled, what do we got here? What do we got here on the 5-minute time frame? We don't care about you. We don't love you. So just a quick little move to the downside. Probably going to hit that 2618 fib. Let's see what we got here. Boom. Let's go based off of candle bodies. More conservative shot is already hit. So maybe I don't want to take that trade. What do I see on the other side? That would be some bullish divergence coming back from this point right here. We'd have 1, 2, 3 possible drives. What does the hourly say? The hourly is putting in higher lows, so hidden bearish divergence on the other side. Where is that bearish divergence coming from? This particular point right here, and we did have the 4 drives. What am I talking about here? So we got 1, 2, 3, 4 drives. So if we were going to do this, it would look something like this. All right, we got a trade set up on the hourly time frame. Let's get excited. Let's get going here. So that's the 4th drive. And again, that is where price is making lower highs, RSI is making higher highs. So if I wanted to go, you know, full bar extreme, I would have a target right there. But instead, I think a target right here at 19,251, that would be right below our 19,300 target. We got 40 minutes left on this candle. Volatility is just beginning to expand after we had the first kind of rejection of expansion, right? We got right above 20%, came back down. Now we are limiting up, and what do we got? The 15 minutes down, volatility is expanding, momentum to the downside. Bearish divergence is in play, coming back all the way from this point right here. So let's enter that trade and throw on a little risk management. Throw on that risk management, sir. And look at this beautiful little trend line coming up from these wicks right here. Are we going to get extension on this little dump party here? I'm not sure, but I want to go ahead and up that leverage to 10x and see what we can get off of this move. Carefully, I want to enter this trade. I don't want to get too excited before. Oh, look, yeah, getting a little backfill here. Getting a little backfill as we broke the range. So what do I see here from this wick, which we just took out to that wick? Often you will get a backfill up to the 100 percentile. The next target is the 1618. And we will, if we confirm this as a local low, we will confirm another drive of hidden bullish divergence where price is making lower lows and RSI is making higher lows. Oh boy, I'm getting hungry today, guys. And guess what? The air went out at our office today. I don't know what to tell you about that, but it is sweltering hot, and we are 14 minutes in this video, and I do want to get on to some of our more higher term time frame ideas, which are going to participate. They're going to precipitate some of the larger moves. Again, the higher the time frame, the bigger the move. Oh, look at that backfill. So now's when I like to put on the jewel and just take a look here, take a peeky peek. And so where did we flash blue? Right there. So now would be a good time to actually take a trade, in my opinion. Not financial advice, I'm not a financial advisor. However, what I could do is take a trade right now. We got 7 minutes left on this candle. And again, I said we like to test the 100 percentile. Really, this is the last of the Mohicans, right? So on the Fibonacci retracement levels, what you want to look for is the 618. Okay, up to the 9. Low volume on this candle, but that could be a bearish engulfing or a bearish engulfing candle. So did the move already get played out? Which would have been this. Candle body style. Down to the 1618, or the 2618 after 4 drives. We did get the 4 drives of hidden bearish divergence. Coming back from this point right here, we got multiple drives. 1, 2, 3, 4. Okay, that was it. That was it. It would have been confirmed right there on this candle as that confirmed as a lower high. So on the other side of hidden bullish divergence, it's always going to, hidden bearish divergence is always going to be hidden bullish divergence on the other side. And because it is a weekend, typically you're going to see more of the ranging price action, right? Where it just flip-flops and goes up and down. And all right, I'm going to get into the meat of this video. I got one live trade in for you guys. And what is the meat of this video? Here's what it is. The jobs report, it did come out on Friday, and well, what happened? The market was up 300 points, and it closed down. Down to doggy town. And why? This jobs report, here's what Steve Forbes was saying on Fox News, and this is a direct quote. They recognized total hours worked, it actually went down. Also, the wages gain was only 2.1%. So the Fed is determined to put this economy into a recession. It's the only way the Fed knows how to fight inflation. Make people poor, right? And guess what? Nobody feels poor yet. Why? If you invested in the stock market in 2019, January 2019, the NASDAQ was at 7,000. Now, oh, look at this, by the way. Getting rejected off of this 9 exponential. Looks like we want to head back down to the green 55, wipe out that bounce. So the idea is until people feel poor, right? If this was 2019, January 2019, and this is January 2019, right here. Call it January. This is December. All right, January 2019, right here. You're still up 95% on the NASDAQ? Are you kidding me? So your 401k hasn't become a 201k yet, right? So nobody's feeling the pain. Nobody is feeling the pain, right? Nobody cares. Everybody's still spending. Everybody's still paying for gasoline at like $10, $20 a gallon. I mean, it's crazy. Just wait till a cup of coffee. One cup of coffee is $20, right? That is going to be crazy. So also wages gained 2.1%, and we've got 8.5% inflation and a 5% increase in wages. So people are still waiting for the winter to come along. They're going to have to eat their house. Mortgage payments are being reset right now. They're going to have to pay more, right? So if you had not a fixed rate, but a variable rate coming into this year, right? They're being reset right now, and that's going to hurt the housing market. We're already in a housing recession. That's what they've said. We're already in a recession that's going to a depression, guys. Just wake up and smell the coffee And the productivity is the amount of stuff. Productivity has gone down among laborers. So we're talking about all the workers you have. Labor productivity was down 4%, which means more inflation, right? So if you have less goods and more money chasing the same amount of goods, that's the definition of inflation. Additionally, you've got taxes going up, regulations going up, and it's just hard for companies to produce right now. If we had lower taxes and deregulation, well, that's what Volcker did. And Joe Biden, who can't even put his clothes on, right? Who can't even wipe his bozo clown nose off his face, right? He's doing the exact opposite. And what is he doing? He just increased the size of the IRS by a factor of 6. Are you guys happy about that? How does that make you feel in the next 60 days when you go in a vote, right? Are you happy about that? I tell you one thing I don't like. I don't like the IRS, and I sure as don't like my good hard-earned tax dollars going to things like transgender research. My tax dollars going to fund these progressive, liberal, crazy people like Pelosi and Biden and Kamala. I mean, come on. Come on. Nobody likes it. Nobody likes this garbage. So, what else do we got here? All right, so let's get in the meat and the potatoes of Bitcoin price action and what we've been looking at. There is a major setup formulating as we speak. Look at that monthly close down. Monthly Stokes are still down. Volatility is still increasing. And again, it's trend, momentum, and volatility, and that's how I trade. And what happens when volatility is low? When it expands, the price will go in the direction of the trend. It is that simple. And so here's what I want to talk about. It is the 5-day. The 5-day volatility is just beginning to expand. Now, what am I talking about? Just to clear up the chart a little bit, right? Is the 5-day BBWP. What is this indicator? What is it? It measures volatility. So when volatility is low, one thing we know in Bitcoin land is volatility is right around the corner. You're going to get smacked with some volatility. And what is the BBWP? It's the Bollinger Band with percentile. The Bollinger Band with percentile, it measures the distance of these guys right here. Okay, you see this is the topside Trolinger Band, that is the Bollinger Band, and that is the Trolinger Band. So the farther they get apart, the more volatile the price action is going to be. And for myself, wow, just getting some ideas here as we're speaking. So for myself, volatility just began to expand. Doesn't mean we're going to see it happen right away. And we only have one drive up bearish divergence coming back from this point right here. One drive. So what I would like to see, honestly, I'd like to see a bounce first. And as long as we're below this high at 32,000, I mean, it's going to be down to doggy town. But this typically is, and this 5-day closure just happened yesterday. So why is this important? Well, I'll tell you exactly why it's important. This is our momentum indicator, the stochastics, okay? When they cross down, momentum is to the downside. When they cross up, momentum is to the upside, right? That means price goes up or down. It's that simple. It's not that hard. By the way, you can get a link to TradingView. You can set up your charts just as mine are, and follow along and start to learn by simply clicking on the link in the description below. It's very easy. Don't waste your life away and not take advantage of free tools to learn how financial markets work, because there's one way to financial freedom, and that is becoming a successful trader. You're not going to make as much money at your Starbucks job. You're not going to make as much money going anywhere else in the world, but being able to make your own financial decisions. And this is the first step. People say, where do I get started? I said, did you set up TradingView yet? That's it. That's all you got to do is start to get your TradingView set up. Anyways, as we saw back here, we got a fake out. Not quite, but a little bit of fake out when we regained the exponential, came back down, and then this was the real lift off. So volatility is direction neutral. It doesn't tell us if the prices are going up or down. It tells us that the price is going to go in the direction of the trend. When volatility expands and stochastics are crossed down and will remain crossed down as long as Bitcoin is below 21,763, then we are expecting that move to get hit. And what else do I want to talk about? So after the Jackson Hole meeting, Powell pretty much said, you guys, we're going to crash the markets. We're going to raise rates. We don't care about you and your family. We're just going to, pay off all these other kids' loans, and good luck if you paid for your education. But the typical expansion from a breakdown like this, which, let's see if I can just draw this out really quick. I know we've done it several times on our channel, but yep, that's called a bear flag. The bears claw down, the bulls claw up. So where does that put? Whoa, that's rough. That is rough. That's not fun. That would put Bitcoin down to about 7,600. And how would I mediate that? Well, a closure below this level here, this bottom side Trollinger band right here. I mean, if we close below here, we're going to hit this point at 14, and then a closure below there. Next stop is going to be at 9,300, and the next stop down at 5,300. So that's kind of how these things have worked over time. I am not rubbing a crystal ball. I've just been staring at these charts for a very, very long time. So again, when we got Stokes down, as long as Bitcoin is below 21,765 and volatility begins to expand above the 20 percentile, we got to 19.4%. It's, close enough is close enough. And I would suspect with the jobs report, I don't know if it was bad or good, but I would expect the market, the stock market to lead things to the downside. What else do we have? We have weekly Stokes on Bitcoin coming down to a very low level again. So here's what I would say, actually back onto the 5-day. What I would like to see is another bounce up first. You want to see multiple drives of hidden bearish divergence. We've got one. And the case for bullish divergence is definitely out right now. As this is a lower low and this is a higher low. No, it's not out yet. How would we confirm a drive of bullish divergence? We would want to see a 5-day closure above, call it 20,800, and that would be good enough for me. And I would expect a run, perhaps, a minimum back up to 21.4. the 9, and the second target would be 24,000. I would love it to come back up there, but we did just break this wedge to the downside, very similar to what we saw when we broke this wedge. And again, if you put this on log scale and you draw a trend line from this point here to this point here, it lines up very, very nicely for some more downside action. So bottom line is 5-day closure just confirmed on CMEs on Friday. Volatility is low. We crossed down on the 5-day. The average move is about 40% from the cross down and expansion of volatility. So if we take 40% off of Bitcoin's price action from where we're at today, 40% down from where we're at today, again, and I would identify a closure below that $18,000 pivot. Why? Yeah, so that's the pivot at 18,000 right there. You take out that wick on a 5-day closure, and 100%, I do believe the downside targets will get hit. But again, this is not financial advice. I'm not a financial advisor. We're probably going to see some bounces along the way, maybe along these highs right here, somewhere in that level, maybe that level at 10,000. But another way to take a look at this is going to be using those Fibonacci retracement tools on a bear market. And we did talk about this the other day, is we have the 4-drive philosophy coming back from this point right here. 1, 2. We call that 3, 4. So if we use that philosophy, looking for a move down to the 2618, we would be looking at a move conservatively if we're just using candle bodies. Whoa. 42.59. Don't quote me on that one. That's a rough number to expect, but that's what the chart says. Don't hate me for it. Okay. What about the weekly? What does the weekly say? Volatility expansion from the low levels of 20 percentile. That is not looking good as well. CMEs are crossed down officially. We did close the week on Friday, so we'll open up on Sunday at 3 p.m. That is about as much as you can call a doji candle, or, you know, some people call it the Jesus candle, you know, hanging on the cross, our good Lord and Savior who turned the days around for us believers, where we can win whether the market is going up or whether it's going down. We're winning. We're winning all day long because of our good Lord and Savior. All right, that's it for today, guys. Hopefully you enjoyed. Hopefully it made some sense. And hopefully we can talk again soon. Thanks, and have a blessed day. Take care.